Hi guys, this is a market update for the week of March 24th. We had a short week, only 4 trading days. Everything went down a little bit, not anything spectacular. I think the S&P 500 lost like 15 points. Also, let's look at some other. Gold actually had one of the worst weeks recently in the recent times, you see, but it's still above the breakup point, okay, which is somewhere in here, okay, this downtrend line. Okay, also the oil went down a little bit. Probably everything was related to the dollar. So if you look at the P, the dollar index had a very good week, okay, something like 1% up, which is a lot for the dollar. Okay, let's look again. Let's change this to close. Okay, the line. Go back to S&P 500. Okay, so the picture didn't change too much. The long term, it's below. Market remains below the downtrend line. Okay, so it's too early to say if this is gonna be another lower high or not. We'll see about this. It's most likely, from what I notice, the sentiment of the people on TV, on this website and everywhere which I talk, it's people are uncertain. So we probably will have a little bit of lateral movement here, some consolidation, then eventually another move down. We will see about that. Okay. I need to watch these moving averages if they cross on the upside or not. Will take a long time for this to happen. If it will happen, okay. So let's have a look at some indicator. Some people ask me why I'm not using any indicator, like RSI, I don't know how to pronounce this, and many others. I try to keep things simple. The price movement is the most important. I show you the MACD. Actually, let's look again at MACD on the okay, but on the monthly chart, okay, because otherwise it doesn't have too much significance. Too many false moving up or down. So in here, this is the I modified a little bit the values here. I took it before that's so that I don't have any whipsaw. Okay, so I shared this before. It's pretty good in terms of deciding where the new bear market starts. So pretty much as soon as goes below the zero, this is the beginning of a bear market in this case. So this is actually, you see, it gives a sell signal very, very, very good point actually at the top. And again, the buy signal was not as good, okay, in this case. So we're talking about 2003. I mean, it was fantastically good, but it is not the same as the top. So it didn't turn bullish here somehow, exactly at the top. So again, on 2007, we had the first month. So what's the value here? Almost 1400. This is absolutely fantastic, okay. And again, first movement on the upside was somewhere around 1100. Okay, so it was the same year, 2009, but the market moved really, really bad, really, really fast from here. Okay, had this V recovery. So again, I showed before, we're supposed to be in a bear market according to MACD. Okay, histogram. Okay, so this was the something around here, 1970. That was pretty much the sell signal. Okay, we'll see. This is I like this indicator. So I'll have a look. later. I'll see how it's going. We're supposed to be already like 1, 2, 3, 4, 5, 6, 8 months already in the bear market, according to this. So obviously, officially, we'll be in bear market as soon as we have two negative growth, quarterly growth, and in a row. So 2 quarters down in the row. That will be officially down. And according to technical analysis, it needs to go like at least 20% down from the top and stay there a minimum of 6 months. So none of this happened yet. But this, as I tell you, this MACD, monthly MACD, it's much faster than any of these indicators. So I found another one. Actually, I had it for my. You see, it's very, very long list with indicators. You get actually more confused if you use too many. Okay, you need to focus on a few of them. So let me look at one which is called Elliott Wave Oscillator. Okay, I'm not a big fan of Elliott Wave in general. Okay, I tried to use it a little bit. I didn't have too much success, so I gave up. So this, as you can see, it resembles the MACD, which is okay, but it's a little bit more conservative in a sense. Okay, so here was the sell signal. Okay, in 2008, at the beginning of 2008, according to MACD, and this one, the first negative was here somewhere, like say May 2008. Okay, then again the bull market, the MACD signaled as being what is this? Probably November 2009. Okay, according to MACD. According to Elliott Wave, only at the end of 2010. So they're a little bit different. Right now, as I say, MACD already shows that we're in a bear market. However, this one is not. It's not showing. Keep in mind that it's slower, it's more conservative. But I guess when this will go in the negative territory, that will be for sure a bear market. Okay, so I'll show you this from time to time. This is monthly. This will change very, very slow. Okay, so okay, let's see. I'll have a look a little bit at just quickly at some sectors, financials, XLF. Okay, let's go back to the weekly chart. Okay, this is pretty much, look at the crossing moving averages are very, very clear in here, despite this move on the upside. Definitely below the small 120. I mean, if I had the same picture on S&P 500, I would say for sure this is bear market, but this is much more bearish than the market in general. So this is the financial sector, which is very important. And somebody else from another website inquired about biotechnology. So IBB. This is again extremely bearish. Okay, don't see anything in here. So to be bullish, I mean, let's look at this downtrend line. Huge downtrend line in here. The only thing which you can expect if you look a little bit, let's look on daily. Okay. On a shorter time frame, okay, it's possible to be to move a little bit on the upside. Look at this. This looks like a 2 months bottom here. Okay, here, and was challenged but didn't went below. But it needs to go above this high. So somewhere in here, 273 to 80. You know, that you can hope will go again to the trend. Now, as soon as is going to this downtrend line, I'll be very nervous. I'll probably sell. Okay, again. If it goes above, obviously that's more serious, but I don't think so. So most likely will go down from here. So if you already hold it, you know, until now, you obviously have a big loss this year. You can expect you can wait for a move on the upside then. and sell it. So I know it's very hard to sell when you see you already have a loss. This is psychological. It happens to me, happened to a lot of people. So if I have 1% up, I'm happy to sell it. I made 1% up. If it goes down 5%, I'm not selling. Why? I should sell it right away. Okay, no, I leave it and go back. It's worse. It's even down. It's 20%. It's 30%. You know, and I'm always waiting for this to move up. You know, so a lot of people do this. They don't realize that. Actually, they do realize, but it's hard. You know, to take the loss and eventually re-enter at a more at a better price. Okay, so I'll finish here. We'll definitely talk next week. The most important thing in terms of how the market goes, let's go back to this is the 6 week. Let me see. I don't remember. I think, yeah. So we had, no, this need to be on weekly. Okay, weekly. Right. So we had like 5 weeks in a row on the upside. So somehow this is the first one which goes on the downside. So it's something to take into consideration. The same thing happened here, almost the same. Okay, we had, and look what happened. We had this indecision for another month and then another leg down. So it doesn't necessarily mean it will happen exactly the same, but you should be a little bit more concerned when it goes close to the downtrend line. Okay, so let's leave it here. Let's see next week if it's gonna move down. That will be, you know, more telling that this is we're gonna have another leg down. But I'm waiting for something bigger than this. Okay, this is not convincingly. It's not very convincing that that this is a temporary topping here. So I need to see more action on the downside to believe that. Okay, see you next.